Hello, everybody, again from New York. This is Dr. Leon Perlman, head of the Digital Financial Services Observatory, part of the Columbia Institute for Tele-Information at Columbia Business School in New York City. I really want to welcome you all to this webinar on regulating the Libra cryptocurrency. Our presenter today is Professor Dr. Dirk Zetzsche from the University of Luxembourg. Very honored to have him. The webinar will last for an hour, including Q&A, and end on the hour. So let me introduce you to the DFSO. And before then, could I just ask, for those who've just joined, please keep your microphone off. Do not ask any questions via audio at any time. We, of course, do want questions, so please send questions to the moderator host via the chat box on this WebEx system, and your questions will be read out towards the end of the presentation. So, agenda, just a short introduction to the DFSO, then going to hand over to Dirk, and then the 10 minutes of Q&A. We're going to talk about the Libra cryptocurrency, the consortium, the business proposition, regulatory concerns, cross-border supervision, and conclusions. So here's the webinar team and the DFSO team. We are at Columbia University campus. If you look on the left-hand side, you'll see that red arrow. That's the building we're in, Uris Hall, New York City. Beautiful day here today. And the team is Professor Eddie Noam. He's the director of CITI. That's me on the top right. Then there's Mike Weschler, a research scholar, Sejong Mao, research assistant, and Jason Buckweitz, who's the executive director of CITI. So the observatory is part of CITI. It's funded by the Bill and Melinda Gates Foundation. There's our website, dfsobservatory.com. It's a pretty comprehensive website. You'll find a lot of news and regulations around digital financial services, fintech, distributed ledger technology, blockchain, and various other topics, and also videos of our past conferences and recordings of our past webinars. Our activities, we have that legal and regulatory database I just mentioned, model laws and regulations we've published, so you can actually go to the website and you'll see a lot of the publications that we've produced. They're there for free download. We do a lot of webinars, roundtables, and summits. In fact, if you're in New York City, we have on November 22nd a conference on the crypto economy. So registrations will be going out quite soon, but please save the date if you are in New York City or coming to the city especially. We'd love to have you there. We do commentaries and analysis of new laws and regulations, close collaboration with industry regulators, academics, donors, status-setting bodies around the world. So here are some of our webinars. Again, you can go online and look at these, where there are recordings of these webinars, and some of them have got associated quizzes, so you can test yourself to see how much knowledge you gain during the course of the webinar. So I want to hand over now to Dirk. Dirk is a professor at the Faculty of Law, Economics and Finance at the University of Luxembourg, and one of the world's leading experts in law and regulation of financial technologies worldwide. In fact, you can find many of his excellent papers on the SSRN, Social Science Review Network.com website for download. I'm a good friend of the observatory, and we're very thankful for him giving us his expertise today. And with that, I want to hand over to you, Dirk.
Thank you. About the Facebook cryptocurrency Libra. Of course, we are talking a bit about the future rather than the present, because it's yet project stage, but it has kept regulators around the globe on their feet, and it will be a pleasure to introduce our scholarly perspective on the Libra project so far. We will start with a brief look on the Libra Consortium based on the disclosures that we've seen. We will analyze the business proposition and basically the promises they give to the users and also the public. And then we will approach regulatory concerns and matters of cross-border supervision in this field. Please note, it's only our scholarly view. We don't have inside views from these projects. We don't have any type of affiliations, neither with the project nor with anyone agitating against them. So it's a pure scholarly freedom, and as such, also please understand this is preliminary based on not full information, but we hope it's nevertheless informative for any one of you. Ladies and gentlemen, you may have seen that there's a specific entity called Libra Association with its registered seat in Geneva that will be the entity that runs the whole Libra organization. I say Libra organization because for financial law reasons, we will have a number of sub-entities which together will provide the cryptocurrency environment about which we talk. The Libra Consortium that is a kind of founding members of Libra is, as of now, almost 30 very large firms, many of them from the payment or internet service area. Some prominent names include Uber, but also many others. You could also read in the news that IBM is active or interested in cooperating here. These kind of 30, let me just call it for reasons of simplicity, just a group of 30. This group of 30 is a kind of base investor in the overall Libra development and technology that tries to bring this project to market maturity and eventually wants to ensure a wide acceptance and distribution of the Libra currency. As of now, we have a number of members that have a technology background, and that also makes a lot of sense because according to the disclosures, these consortium members also function as kind of original nodes of the blockchain that will provide the basis for the Libra currency. As of now, this blockchain will be a kind of permissioned blockchain, so closed to public participation as node, but there is a promise in the disclosures that they will move towards a public blockchain within 5 years after starting operations. Let me give you my personal view on the choice of blockchain. It is definitely, from a legal perspective, a wise decision not to start with a public blockchain, because in the beginning there will be quite a number of operational difficulties to manage, and under the laws of many states around the world, participation in a blockchain as node could result in liability of the respective node. And of course, the likelihood that some type of damage comes about in the first years when many things are in the experimental stage is real. And so I can very well understand this type of limitation in the early stage. Whether we will ever see a public blockchain will definitely depend on technological progress, and so it's up to the future to decide whether this is going to happen. Let me just give you a bit of what I understand to be the Libra Organization. There we have the Libra Association with seat in Geneva. Then we will have a kind of Swiss-based financial services entity that has applied for a payment license a few weeks ago. Then we learned that there will be a kind of Irish entity called Calibra, which will try to service the EU clients, and it doesn't require a lot of imagination to assume that there will be other entities, in particular in the United States, and I also assume that we will have respective entities in Asia in every large market in order to ensure that the respective regulatory environments are met. In addition to this kind of front-end entities, we have some type of quasi-entity, which I refer to as a Libra Reserve. In this Libra Reserve will be the assets that essentially back up the cryptocurrency. from the disclosures that I've seen, is uncertain what type of legal status this reserve will have. From my personal legal perspective, it would make a lot of sense to enter into a kind of arrangement that could be a private investment fund, or it could be a kind of separate legal entity that ensures segregation from the Libra reserves obligations and assets from those of the Libra Association, because only then you achieve a clean one-to-one correlation between the reserve holding and Libra currency, which is the whole purpose of the Libra currency. Otherwise, certain, let's say, tax obligations from the Libra Association could hit onto the value of the Libra reserve, which is the antithesis of a stablecoin. So based on that, you see that the Libra Association will be paired with a number of separate legal entities which together provide the Libra services around the globe. And many of this kind of entity-based fragmentation is due to the fact that the regulatory environment in which this project is launched is not harmonized, and so you may need different licenses in different countries. Ladies and gentlemen, let me quickly give you a very simplified overview of how I understand, or how we understand the respective Libra value chain to work. In the beginning, or at the very front end, you have the Libra holder, which will probably have a digital wallet. And this digital wallet will be managed and authorized by specialized service firms, or also some exchanges, some cryptocurrency exchanges. Libra will select a number of exchanges, authorize them to trade and deal with Libra coin, and the respective exchanges will then engage in a kind of transactions with the Libra holder and buy and sell Libra upon demand. The authorized exchanges can either trade the Libra stock on its own account, or they could also kind of buy and basically they will always trade on their own account, but they can buy and sell from their own stock, or they can kind of purchase or sell additional Libra to the Libra Association. You see here, there will not be a direct trade between the Libra holder and the Libra Association, and that makes a lot of sense, because dealing with potentially millions, if not billions, of Libra holders is an entirely different business than securing the stability of the respective Libra coin. Interesting from my perspective is how we understand what's going on behind the Libra Association. There will be a kind of pool of real assets, which we refer to, or which has been referred to in the papers as a Libra reserve. And this kind of pool of real assets will put money in stable financial assets. And these could be fiat currency, or it could be state-issued securities from issuers with very good ratings and with sufficient liquidity to ensure a kind of constant ability to sell and buy, because the dimensions will be enormously large. And so here you need really widely traded currency, and you want to avoid overly high volatility in these currencies, because otherwise Libra itself will not be stable but very volatile. So I'll give you a bit more information on which currencies these will be according to the information we have, but I expect that the Libra reserve will not be held on Libra's own account. That would make very little sense from a banking perspective, and I would also suppose that the management of the Libra reserve will probably be assigned to professional asset managers, simply because they have the technology and they're the experts in this. And if we would assume that, then we would have probably a number of custodians holding part of the Libra reserve. Why a number of custodians? Because for any single custodian that I am aware of on this planet, the overall chunk of Libra risks would just be too high. So it wouldn't make a lot of sense from Libra's perspective to pick just one custodian, because that custodian would immediately become a very large systemic important institution and then subject to additional regulation. So it would make sense to basically split the Libra reserve over a number of very large and stable custodians and give each of them a chunk in the Libra reserve currency. And these custodians will then hold the fiat currency on their own balance sheet or hold the state-backed securities on a separate account. These custodians, of course, somehow must get these assets, and usually the asset manager will instruct a broker to buy them on respective exchanges, or if it's in the case of cash, there may also be a refinancing transaction with the respective central bank in an issue, depending on who the custodians are and whether they have central bank. You see, ladies and gentlemen, that the Libra organization has a lot of links to the regulated financial systems by this very promise that it invests in stable financial assets, because most of these stable financial assets are just existing in the financial world and not so much in the crypto world so far. Based on this kind of analysis, let me come to the next step, the governance of the Libra Association. Right now, there is a council governing the Libra Association, and each member has one individual representative. And the voting powers of members shall be proportional to the stake in Libra, but kept at 1% for the founders. That definitely serves to take any type of piercing the corporate wheel or similar direct liability schemes out of the original membership, because if you don't have influence, you cannot be accused of basically turning the Libra Association into some type of whatever shell for your own business purposes. And of course, the Libra Association Council will have the ultimate power and overriding capacity. For instance, it could fire management, set up committees, and so on. And this ensures that it's a member-based organization rather than a board-based. Again, in addition to the overall appeal that an association may have to the crypto societies around the world, one of the legal reasons for that choice may be to ensure that traditional corporate law doctrines do not apply to this type of organization. We have then a Libra Association board, and all council representatives or respective members here sit together with the managing director, and the managing director is, of course, the true CEO of the overall Libra organization that we've seen before. In this case, you have one managing director presiding, the individual currently impersonating in that capacity. I don't want to mention his name here right now, but he's quite visible in the press. He will probably be the true acting person in that type of large organization. Ladies and gentlemen, Libra Association, as I earlier mentioned, will function as a shield against certain liability. It is set up in this way also to bundle, of course, the original investment, but also because it allows for a stringent way to meet regulatory obligations. And in a way, it is very hard in such a scheme to legally allocate certain types of influence to Facebook, which is the initiating entity behind everything. And that may be out of concern that the sheer size of the whole Libra organization would be a heavy burden on any balance sheet of any individual entity around the world, simply due to the size of potential liability that comes with it. Of course, we have to see how practice is. Right now, we've seen only disclosures, and over time, if what they promise is adhered to, this liability shielding may work in most cases. But of course, we may have certain substance or form concerns if the practice deviates from that. And in this regard, of course, we lack the facts to make any kind of sound statement. Ladies and gentlemen, let me come to my next point, which is an analysis of the propositions or the business propositions that we've seen in the disclosures. On the one hand, it is promised in the disclosures that Libra should further financial inclusion. Definitely, we expect Libra to provide both cash in and cash out, which is a kind of base function of any type of currency, because these 30, the group of 30, how I call them, the original consortium is so large that there will be, from the very beginning, widespread number of shop owners and merchants and service providers around the world which are likely to accept the currency. And we could also expect that certain governments may piggyback on this infrastructure if they want to provide certain type of liquid cryptocurrency in certain instances where they cannot provide banking services on their own for many reasons, like in certain island states where it's just too costly to set up bank branches. However, it is a bit doubtful whether we see Libra really as liquid currency for the unbanked. And there's many reasons. On the one hand, we have a number of countries which have banned the Facebook services and also other internet-based services, and more than half of the world's unbanked live in these countries. So there may be a service interruption and other very inconvenient factors that prohibit the widespread acceptance of Libra. And we also may see a certain competition with state-backed cryptocurrencies in some of these countries. And so it may be that in the very countries where financial inclusion would matter most, there will be factual barriers to the success of Libra as a currency. But there comes also another factor, and that comes with the stable characteristics of Libra. If in fact Libra invests in very hard currency in order to achieve currency stability, the population of usually developing countries where we have the most unbanked people suffer from a certain illiquidity in their own currency. And that means they cannot simply swap their local currency into US dollars or euro because no one wants to have it. If now the Libra reserve primarily holds these very hard currencies, we could expect that Libra in itself will substitute for the euro and US dollar. And in this case, usually holders of less liquid securities need to pay a discount for swapping their own currency into the hard currency. And I don't see any economic reason why this will not happen in the case of Libra. And now imagine that these kind of discounts can be extremely hard. We speak about 2-digit percentage points in some developing countries, and that would be a heavy toll on on the unbanked, because we speak about the poorest part of society to use Facebook. Every time you swap into Libra, you pay a 10, 15%, 20% discount on the face value of your currency. And so for that reason, I think financial inclusion in the countries where it's most needed, there's a certain question mark whether this project can overcome the barriers that do exist. The next aspect of the business proposition is, of course, cost savings. And very clear evidence that this project will provide cost savings is the composition of the consortium. Most of these consortium members have enormously high cost for money transfer for payment services. So in the case of Uber, we have, I've written here 800 million reasons for Libra. So if Uber could have the cost savings on what they currently pay for credit card fees and something else in this regard, this is a very, very strong reason to give rebates to clients if they use Libra. And this, of course, will help the Libra project to be widely spread around the planet. Interestingly is who will save the cost. Primarily, of course, the service provider. But of course, we also need to consider that we have a very, very huge number of remittances around the world from migrant workers. There are some statistics out there that say that the remittances around the world easily exceed the number of development aid that has been wired from the developed countries to the developing countries. And if this is true, then of course enhancing the efficiency of these giant amount of remittances, which will be in the vicinity of 50 billion each year, that will have a huge impact on the money received in the developing countries. And in this regard, of course, cost savings could work beneficially to the respective recipient countries, which simply get more out of the same amount of remittance. Well, another promise in the disclosures is that Libra is a stable coin. And stability is, of course, a matter of perspective. But according to the information received in the last days, the currency basket will be around 50% US dollar, 18% euro, 14% Japanese yen, 11% British pound, and the Singapore dollar will be the remainder of 7%. Interestingly, you don't see the Swiss franc here. We should ask why this is the case. Probably there are some calculations underlying that this is a correlation between the Swiss franc and maybe other currencies, or it could also be that the Swiss franc has been excluded because the whole organization sits in Switzerland and there may have been some regulatory concerns. But this is a pure speculation from my side. Stability is a matter of perspective, and here is why. If I have only one of these 5 currencies in my pocket and I live in an internal market that only works in, let's say, US dollar or euro, adding other type of currencies to my home basket will be a source of instability. And of course, there is some volatility between the US dollar, the euro, and the British pound and other of these currencies. Of course, they are fluctuating, and that means from the internal perspective, it may be less stable than your home currencies. And in particular, when you have a wide business use for Libra, you may face a need to hedge against Libra's currency. And this is in particular important in low margin businesses where you can take any type of volatility risk. But of course, Libra could function as large-scale global basket for globally active enterprises, the multinationals that act around the world. For them, it could be a kind of less expensive hedge for its overall currency risk. Of course, these type of economic characteristics will definitely be very important because if the multinationals use Libra as global hedge, then of course it's also more important that the Libra organization is able to provide the type of hedging that otherwise the multinationals would do by themselves. So here may be a business proposition for the Libra project, which is entirely unrelated to individuals and very much to multinational enterprises. Another aspect, and I think this is very important, the link to the Group of 30 in the Libra Consortium promises immediate scale. And we all know that Facebook, which was the initiator of this project, promises alone enormous scale. Of course, the scale is coming from somewhere, and the more people switch into the use of Libra, the banks, the traditional payment providers, and maybe also other fintechs will lose out against Libra simply for lack of scale and data. Because in the current tech-driven business environment, scale and the amount of data that you have in your fingertips decides whether you win or lose out to your competition. And of course, in this regard, we see a significant disruptive potential. Please note that disruption is neither good or bad. We have always to see what the effects of the disruption are. Maybe if we enhance efficiency within the payment system, disruption could be very beneficial. But we could also build new kind of chunks of risks in the hands of a single institution. And in this case, disruption could increase systemic risk. So you see, there's a certain kind of trade-off. The important part is probably like no other fintech project that I've seen before, Libra has the potential to disrupt and probably more and even much larger institution than any other institution that I've seen and than other technology that I've seen before. Ladies and gentlemen, let me now come to regulatory concerns. And this is a field where we are yet very much in the beginning, so I will touch a number of topics without providing a definitive conclusion, simply also because we lack the definitive information, and I'm also pretty sure that there's a lot of legal departments working behind the scenes to optimize the regulatory setup of Libra. What we know is they have applied for payment service provider license, and the Swiss FINMA already initiated a kind of response saying we will ask for more than simply payment service provider without going into details, but we would also ask for international cooperation because of the size and the scale of the project. Well, my good friend Prof. Buckley cited me here in one of his lectures, and I take the liberty to do that myself, to pick it up myself. And apparently I said when I was driving on the Autobahn, the faster you go, the further you need to look down the road. And this, of course, is particularly true for Libra as well, because Libra is driving extremely fast with the type of scale and the service level they have in their mind. And that means they have to consider quite a number of different licenses. So on the service side, for instance, we could find Libra being subject to money transmitter and payment service providers licenses. We have similar things like that all around the world. There may be an e-money license, but you only need that if you're not a bank. If you're a bank, then maybe the banking license may consume other type of licenses that I've listed here. And of course, it all depends on how you accept the fiat currency in return for Libra. Once you start maybe giving credit for accepting Libra or also accepting fiat deposits, you may need a license as a bank or credit institution, which of course enhances the cost that you're facing. Please also look again at the slide, which is already seen. There comes additional licensing conditions from the very fact that we have a large Libra reserve, and that we try to basically mimic Libra. Libra is trying to mimic one-to-one the underlying assets of the Libra reserve. That could result under certain conditions in the qualification of Libra as a money market fund. We've seen constant NAV funds before in the United States in particular. And in this case, the Libra exchanges would be a kind of the transfer agents that provide for the redemption rights to the investors. So depending on how you look on that, this could be the outcome of legal qualification. It would have upsides and downsides. Of course, a constant NAV money market fund has also certain regulatory rights to consider, but at least within the EU and with the US, there would be a clear distribution scheme that would ensure widespread acceptance. And within the investment fund world, there is a clear way of pooling of assets and protecting these assets against other type of claims. So there's some upside and downside coming with that. We do not assume that Libra likes the qualification as money market fund, but it's one way to look at things. And of course, regulators around the world could also understand the whole setup as one of constant NAV money market fund. Let me continue here. We have then another way of qualifying Libra legally by looking basically at the coin characteristic. So we could ask, it's a currency, it's a commodity, it's a financial derivative, and so on. And based on that come a number of additional ways to license it. And here, in particular, from the US perspective, in very simplified terms, we would ask for whether Libra is going to ask the holders to speculate on an increasing value, so whether the holders want to benefit from the work of others. Of course, in a way, if stability is a service, this will going to happen. Of course, stability as a service is something that has not yet been accepted. If you also understand it simple in isolated view, benefit as a kind of increase. Libra promises stability rather than income, and in this case, you could also come to the conclusion that the security test has not been met. But of course, if you understand Libra as a cross-country currency hedge, then that would be a kind of benefit that could definitely result also here in the qualification. In the EU, it's a bit simpler because Libra is linked as a derivative to financial instruments, the securities, the state-backed securities that they are going to issue. And in this regard, I would have little doubt that there is one way to qualify financial instrument. I give the financial instrument criteria here to Libra. Of course, it all depends also on the competing type of qualifications that we may have for Libra, and there may be some qualification that covers the previous ones. If, for instance, we would have a kind of qualification, then there may be some type of overlapping type of regulation. Of course, for regulators, it's a challenge to balance. Another type of regulation that may come to Libra comes from the risk management. And I told you already that the challenge will be basically on that scale to let the Libra Reserve function properly. And here it is important that there is very, very little margin for error. When you run such a huge amount, even mistakes in the 0.1% range will have a giant impact. And of course, you will have to have very stable custodian arrangements and make sure that those custodians don't result in enormous systemic risk. I have no doubt that these firms together will have a lot of capital. Many of these tech firms involved have more capital than the largest banks in the world. So there will be not a problem with capital. Many people speak about systemic risk. I personally see the operational risk as the larger challenge due to the scale, due to the many countries involved, due to the very fact that the money streams must be coordinated around the globe in order to achieve that basket function. That is, in real world terms, an enormous challenge, which requires harmonization of many different aspects of the global financial markets. And simply due to the scale, we may find out that all of this is a challenge to the liquidity at some of these markets, or if not, the currencies in themselves. Particularly, Singapore is a financial center, but whether they have the liquidity in their own Singapore dollar to provide a 7% stage Libra Reserve is something that must be tested by economic means before this road is going to be taken. Well, but let me go on. Of course, there will be a lot of identity and IML checks. Let me just tell you, with that large organization, Libra will have the capacity to implement their own IDs. And even in some functions, you may replace your official identity card or passport or whatever, because your business ID becomes much more important, your Libra ID, than your base ID for commercial transactions. In particular, what I just tell you is true. If the Libra organization ensures AML checks, then it may be a very nice service to rely on Libra and avoid additional problems with AML checks on your own business enterprise, simply because you have already some large organization which took care of that. Monetary policy is, of course, a concern. This is something that many regulators have aired around the world. I don't want to go here into the details, but of course, the concern have a number of sovereignty concerns to consider. When there's a lot of money flowing into Libra, many countries around the world will have less influence, and this money is essentially flowing into US dollar and euro. This will make up together 70%. So that could, of course, result in a certain weakening of the regulatory influence. But of course, also let's consider that most global custodians are under the influence of some countries, and that may not find a lot of appeal in the eyes of other regulators. Data protection is primarily in the EU a major concern, but we've also seen a lot of response in other countries around the world. Let me just say we have some severe penalties here to be considered in the case of data violations, and here it is important which entity is going to pay the bill if these penalties come up. Tax, of course, if regulators would subject Libra to transaction tax, so VAT, that would be heavy blow to the organization, of course, and of course, income tax considerations. I think if there are profits to be made from Libra, the respective tax laws will adjust, and I do not see any type of taxless income for the long term, at least, if this project is successful. Let me come to disclosures. Of course, there's a lot of stuff that has not yet been disclosed sufficiently, and I would think, given the importance of the Libra Reserve, that there's more investment style disclosures necessary. So how are fees created? What about the hedging costs, the hedging strategy, the operational risks? What do the individual players in the value chain earn when they handle this? So there's quite a bit of stuff, and I would expect, if I have a global organization like that, so that we have full transparency on each individual step, because only then the respective holders know what they get. Compare this with a central bank. Here we have no type of insolvency risk, but of course the Libra Association and the Libra Reserve could in theory become bankrupt, and for that reason it's very important to know who the players are, what they earn, and how much they take out of the pot of the overall Libra organization. Let me continue now with the most important part of my presentation. The Libra project is global, and it is very crucial that regulators find an approach to this project. I do not expect all these regulators around the globe to have the same approach. Many of them will have the local approach, and in this case, it's a bit of a shame that we have recognition schemes only in very limited cases. So, for instance, when we have financial derivatives, there is something like recognition or substituted compliance of foreign laws and regulations also in other countries. That makes it easier to come to a harmonized regulatory approach. But while, in particular in Europe, we have a kind of equivalence-based substituted compliance in many pieces of financial legislation, this approach has not yet put to a practice test. And so I would really assume that we will have very many quite diverging local licenses governing the Libra exchanges, and also the Libra Reserve. Based on that, it is very crucial that regulators sit around the globe together and agree on the kind of must-have in order to assure cross-regional interoperability. Because if interoperability is not ensured, what we will find is that this global Libra Reserve will be segregated, and only part of that will backing up part of the respective currency. Yeah? So I would then expect, for instance, the Europeans to ask for an EU-only reserve, and the Americans for an US dollar-only reserve, simply in order to reflect the respective currency risks in their respective home jurisdiction. So one thing we could hope for in positive terms is a joint supervisory college. But of course, this comes with the question, who's leading the regulators and who will set the tone? Of course, we have very confident, self-confident regulators among those who are strongly under the impact of Libra. And I see quite a political struggle coming up when it comes to the question, who is leading this joint supervisory college. But if there is nothing like a supervisory college, it will be a very difficult challenge to get to a kind of workable regulatory field. And in this regard, of course, we have no precedent, which makes it all the more interesting to see what's going on. Let me basically conclude. Ladies and gentlemen, Libra's growth will render this project within minutes or seconds after its launch into the too large to fail area, which means they have the regulatory attention ensured. We have yet vague disclosures, and which type of licensing is necessary depends on the details. I can just assure you there won't be any regulator around the world which will not impose regulatory requirements on this project, simply due to the heavy impact on the retail clients and the quite significant systemic risk, and all the more true if Libra really becomes the kind of reserve hedging service for multinationals, then there's even more money flowing into that, which justifies a careful look. It's simply too large to care. From a regulatory perspective, it provides a new test case for global collaboration. It shows also that we have quite an inconsistent regulatory environment around the globe. And I can just tell you from the immediate response that I've observed from regulators around the world, I'm not entirely sure whether Libra is perceived as a fair lady. Yeah? Many will give, for certain reasons, a very careful look. And in this regard, I think the most important function of Libra is that it shows to function as a door opener, maybe for other Libra clones that may come up. Sometimes we have seen in the fintech space that the first mover was not the last winner. And maybe because Libra is caught up now in the regulatory attention around the world, we may see Libra as a very interesting academic and research project, but whether it will ever come to life is cast in doubt. With that, I thank you very much for your attention, and I'm very much looking forward to your questions. And in this regard, I hand over back to New York City.
Thank you, Dirk. As expected, you've painted a picture of a very ambitious project, and with great potential, but also challenges in its implementation, and of course, as you sketched out, challenges for global regulators, especially on the coordination front, putting a whole lot of catching a whole lot of balls in the air. So I want to open it up to questions, and we do have some questions already, so thank you for those who answered the call for questions. So if you could please, no audio questions, if you could put your questions into the host, towards the host, and they'll come through to me. So we have a couple of questions. First one is from Rodrigo in Mexico City. Rodrigo, thanks very much for your question. He asks about the FATF travel rule, and how will this is what he asked, how will the KYC and customer identification and verification system be handled across borders, affect the scalability of Libra use around the world?
Yeah, thank you very much. Usually, KYC rules are local. We have some global standards in this field, the FATF standards, which result in some harmonization. But the implementation of these standards and the supervision of those standards is usually local. And we would expect that the respective local standards result in some preference, something money in the beginning in countries that have a better FATF rating than other countries. We know for Europe that, for instance, this function should be assigned to the Irish Calibra entity, and in this regard, we would expect the screening taking place based on those regulations that apply. But every exchange that takes in Libra currency will be subject to AML checks. That is definitely something that no regulator can give up. This is a minimum requirement because Libra is just too large a structure that you could allow for money streams flowing through the Libra chain into other countries, both from money laundering and also in a counter-terrorism financing aspect. And if any country is linked to the Libra chain that does not meet that, I would definitely expect very heavy-handed regulatory response from the other countries. And that means, of course, that probably the Libra network will not start in countries that have a less trustworthy rating or any type of doubt in the field of anti-money laundering KYC.
Thanks, sir. Can I just follow-up question to that from me are you assuming then that there's a reciprocal recognition of identities from both the receiver and sender side? So the sender jurisdiction accepts the receiver identity system and vice versa.
Well, what we know from payment transfers is that we have certain payment areas basically function as, if I may say so, cooperating circles. So you may have the whole US as payment area and the EU as payment area. And if money is changing hands from the one circle to the other circle, usually you look at the reliability of that respective sending country and the other way around. And if any of these countries does not meet the respective compliance requirements, then money from that one circle cannot be wired into the other circle. And this is not a new problem. It will just also be applicable also to Libra, of course. And the local organizations of Libra need to deal with these requirements, because it could mean that money from the reserves cannot, that it should come into the reserve, cannot be channeled to the reserve if they take in money at the wrong part of the world. And that would mean they would need to set up several type of reserves with limited access to the hedging projects. And as I said, it will be definitely crucial that this solution, that this question is well thought through in order to find solutions.
Well, you mentioned then the Facebook identity play potentially part of this. Would that mean that federated or self-sovereign IDs would be acceptable in so much as a national ID or similar state-issued ID for cross-border purposes?
Yeah, this may end up to be the result, and we have already something like that. When you want to register for a large platform where you book apartments, I don't want to mention the name right now, you may need a certain mail address from a widely known internet company, in order to provide evidence that you are the person. And it's quite interesting. Right. I hold 4 or 5 digital IDs, and of course it would be quite logical that the same happens here. But of course, on top, once you have only AML check clients within the Libra framework, it may of course facilitate ML checks, because the respective ML checks, if they are professionally done, may provide the basis for a faster second AML check at a different part of the Libra value chain. So there could be some scale effects also when it comes to AML KYC once you have the identity data clean and well organized.
So this AML KYC question has precipitated a whole lot of questions coming in now. From Phil Griffin asks about dynamic AML when players go bad after joining. I assume he's talking about the ongoing customer due diligence. How would that be? How would that be checked, or is it done at a local level, local country level?
Yeah, of course, whenever the transaction takes place, the AML situation must be clarified and clean, and of course this requires some ongoing devices. How and whether this works strongly depends on the individual transactions. I cannot now make a general statement that with a dynamic AML check we cover all and every situation, because the AML rules are simply not that simple. But of course, as long as the money is just circulating within the Libra framework and it's not being retransferred into fiat, and we have a full track of how it got in and how it got out, that could simplify the AML situation. The data trail is on a blockchain is simply there. And of course, it may even facilitate AML. Of course, regulators will definitely make sure that they have the best AML checks available in this field. Otherwise, they will raise concerns.
Okay, well, that follows on to the swap between fiat and digital Libra is a question from Hamilton in London. What will the cost savings be, do you think, in using a Libra wallet in a country versus mobile money remittances? So I assume there's some sort of fiat Libra conversion there. I know there's no pricing, so
regulatory disclosures we don't have yet clear cost grids, but of course the remittances suffer from 5 to 15% fees, and there is some potential to undercut that. Let me make this very simple. If this whole network is set up and its fee structure is reasonable, then it will be lesser than 5 to 50%. But there's a lot of potential there. Yeah?
Okay. Now some questions on the structure of the Libra. How much of a retail play is this versus an enterprise play? This is from Shamila in New Delhi, say with JP Morgan Coin and Ripple's XRP. And similarly, there's one from Joel who asks about a different business model for Libra that could be a CBDC, a central bank digital currency. So I think asking for the questions that we've got seem to be asking is what form would Libra take or can take? Right now, it appears to be a retail play. Is there an enterprise or CDBC play for it too?
As I already said, if Libra really provides the stability it promises, it could substitute for the global hedging strategy that many multinationals apply, because they cover in the currency basket the US dollar, the euro, the British pound, Singapore, Japan. So this is quite a large number of the world's economy. They have not yet covered China. This is, of course, something that could get down to the very fact that yet it is not entirely clear that they can take in renminbi in the respective way, that they can provide custodial functions and so on. But of course, yes, for certain multinationals, it could become a kind of hedge substitute in lieu of other hedging strategies they apply. The other thing that's driving Libra is, of course, the fact that certain companies simply pay millions in fees for banks, and if part of that fees could be saved by implementing Libra, let's expect heavy rebates for clients that pay in Libra rather than using their original credit card or whatsoever. So there is some strong reason why a group of 30 is interested in getting this off the ground.
Okay, one final question from Abdul in Amman, Jordan. Could you comment on the French approach to Libra? I think Abdul's referring to the French Finance Minister Bruno Le Maire's comments about Libra last week, I think it was, or the week before.
Well, there's quite a number of statements right now, and I would hesitate to single out any particular regulator and assessing on that. I know that there's, generally speaking, concern on the sovereignty side. I know about quite a number of working groups in this field, and I do not want to comment on any individual regulator's approach at this point in time because it's too early. We lack the full information on the background, and maybe they have better information than I do, and I simply would ask to understand that this is not a good approach.
Okay, thank you. That's a fair comment. And we're just about on the hour to end. And Dirk, you've written, along with your collaborators, a paper on regulating Libra. That's on SSRN, correct?
Yes.
Okay, so everybody, if you want to follow up in a more comprehensive, or as comprehensive, but in a paper form of this presentation, go to SSRN and just look for Dirk's paper on regulating Libra. And as I mentioned at the beginning, a lot of excellent work from Dirk and his collaborators on fintech and tech fins and the regulation thereof. And with that, I want to thank Dirk for his time today and giving us of his expertise. I'm sure everybody learned something. And again, thank you everybody for your questions that came through, and those who stayed on till right to the end. We really appreciate your attention. And again, just want to save the date for November 22nd in New York City, the Crypto Economy Conference that the DFSO CITI is hosting here at the Columbia Business School. So look out for that, and wherever you are in the world, have a good evening, good night, or good morning, or good afternoon. Thank you very much, everybody.